Okay, let's dive straight into this. Welcome to today's explainer. Today, we're taking a deep, highly analytical look at an anonymous expert report that tackles a really critical challenge for international entrepreneurs, and that's securing robust, cross-border financial accounts for US LLCs. Now, if you're operating a global business, you already know that moving money across borders isn't just about, finding a service. It's about building a resilient financial infrastructure that won't just suddenly collapse under the weight of compliance algorithms. So we're going to deconstruct the exact strategic rationale behind choosing advanced multi-currency platforms over the basic alternatives. And more importantly, we're going to map out the rigid operational execution you actually need to get these accounts approved. So here's our analytical roadmap for today. 1. Mitigating account closure risks. 2. Advanced platform strategic advantages. 3. Navigating application digital prerequisites. 4. Profiling business operations accurately. 5. Verifying ultimate beneficial ownership. And 6. Ensuring long-term financial continuity. Section 1. Mitigating account closure risks. Listen, for an international entrepreneur running the US LLC, the single greatest operational threat is sudden, unexplained debanking. Imagine waking up and your entire cash flow is just frozen, or worse, terminated. Well, the report Brilliant illustrates exactly why that happens, highlighting a direct, inverse relationship between application friction and long-term stability. See, entry-level platforms are super popular because they have very low application friction, right? They automate onboarding to get you up and running in minutes. But here's the strategic trade-off. Their back-end compliance algorithms are inherently paranoid. They'll immediately shut down an account at the first sign of complex cross-border activity, simply because they didn't vet you properly on day one. On the flip side, advanced multi-currency platforms demand rigorous upfront vetting. By forcing you to thoroughly map out your business model before your very first transfer, they're actually granting you superior long-term operational stability. I really want to highlight this specific insight from the expert analysis. It states, the rigorous vetting process of advanced platforms is not an administrative hurdle, but a paramount safeguard ensuring lower propensity for abrupt account terminations. As an entrepreneur, it is absolutely crucial to radically reframe how you view application friction. It's not an annoyance. It's literally a structural defense mechanism for your business. The platform is intentionally expending resources to verify your operational realities right now, precisely so they don't have to panic freeze your funds later on. Moving on to Section 2, Advanced Platform Strategic Advantages. So you might be wondering, why endure all that rigorous vetting in the first place? Well, because we are no longer just discussing mere money transmission. We're talking about adopting a comprehensive financial operating system that can entirely replace traditional banking infrastructure. An advanced platform doesn't just, receive wires. It provides end-to-end payment processing so you can directly capture client funds. It gives you robust API solutions that weave seamlessly into your existing software stack. Plus, you get centralized expense management and the ability to issue multi-currency corporate cards globally. But here's the real game changer. Operating on interbank foreign exchange rates fundamentally strips away those hidden predatory international fees that usually eat away at cross-border profit margins. You are essentially spinning up your own bespoke, borderless treasury department. And there's more. The report points out a highly actionable, non-obvious financial incentive. Even on their free tier plans, experts note that some of these advanced platforms offer up to a 1.5% cash rebate on local US spending. Think about that for a second. If your business runs significant operational expenses like bulk software subscriptions, high-volume ad networks, or massive server hosting, that 1.5% is not just some polite little perk. It's a direct addition to your bottom line net margin that compounds with every single transaction you make. All right, Section 3, Navigating Application Digital Prerequisites. Because these advanced infrastructures are so strict, you can't just stumble into the application process unprepared. Before you even think about clicking apply, You have to prepare a non-negotiable matrix of digital data. You absolutely need your US EIN. You must have a registered physical address in the US. And to be clear, that means a real address, not just a PO box. You're going to need a dedicated US phone number that can reliably receive SMS verification codes. You need the exact date and state of your incorporation, like Wyoming or Delaware, for instance. And finally, having a domain-specific corporate email is absolutely vital. Let me actually pause on that last point for a second, because it's a highly actionable implicit compliance rule uncovered in the analysis. If you apply using a generic, public email address, like a standard free Gmail or Yahoo account, you are instantly signaling to the compliance algorithm that you're a temporary, high-risk, or entirely unprofessional entity. The expert report indicates that this frequently triggers an automatic, immediate application rejection, no questions asked. You absolutely must use a professional email attached to your established corporate domain to clear this initial algorithmic gate. Let's look at Section 4. Profiling business operations accurately. Okay, so once those technical prerequisites are met, you have to build a precise compliance profile. This is exactly where vague applicants fail. Compliance algorithms require strict cause and effect mapping regarding how your money moves. You have to articulate your exact business model. What specific service do you provide, and exactly who is your target demographic? You also have to definitively prove your real-world existence through a robust digital footprint. We're talking a live corporate website or an extensively documented professional network profile. And finally, for anti-money laundering compliance, you have to precisely map the geographic origins of your incoming funds. So if your clients are primarily in Canada and the UK, you must declare that up front. Your stated activities have to perfectly align with the actual regions your revenue originates from. And here is a major behavioral pitfall you need to avoid. During the application, you're going to be required to estimate your expected monthly financial volume. Now, there is a very strong temptation to underreport this. Saying you expect $10,000 a month instead of your true projection of $100,000 in a misguided attempt to slide under the radar and avoid deeper scrutiny. But the expert analysis strictly warns against doing this. If you claim a low volume, but then immediately start moving massive sums of money, you are going to automatically trigger the exact intensive compliance audits you were trying to avoid in the first place. And that severely compromises your future account stability. You have to be brutally precise and honest about your operational scale. Section 5. Verifying ultimate beneficial ownership. We now arrive at the most legally rigid mechanism of international compliance. Financial institutions are legally mandated to identify the actual human beings controlling the corporate entity. The analysis identifies a very strict standard here. An ultimate beneficial owner, or controlling person, is defined as any individual holding 25% or more equity in the business. But, and this is key, it also includes anyone exercising significant executive control, like a CEO or a managing director, even if their equity share is substantially lower than that 25% mark. If you hit this regulatory trigger, you must be fully vetted. So, for every single individual who meets that UBO criteria, a specific, absolutely inflexible set of documentation is mandatory. We're talking full legal name, date of birth, nationality, and a high-resolution, uncropped scan of a government-issued ID or passport. Now, here is a highly non-obvious and super valuable detail for international entrepreneurs. Your verified current residential address can absolutely be outside the United States. Foreign addresses are perfectly acceptable to these platforms, but they must be meticulously documented and perfectly match the address listed on your identity documents. Even minor inconsistencies here are a primary mechanical cause of severe application delays. And finally, Section 6. Ensuring long-term financial continuity. Ultimately, mastering this friction, executing precise profiling, and organizing all that UBO documentation serves a single, absolutely critical purpose: ensuring long-term business continuity. Notice the application timeline here. You might logically assume that all this rigorous vetting takes weeks, right? But the analysis reveals a distinct cause and effect relationship.
If your data is perfectly structured, processing is actually remarkably fast. You submit on day 0. Automated and manual screening occurs on day 1. And with a coherent, easily verifiable profile, full account activation and platform access often happen within just 1 to 3 days. Your upfront precision yields immediate operational speed.
I want to leave you with a final provocative thought. Relying on simple, highly automated accounts might feel really efficient today, but it introduces a massive structural vulnerability to your operations. Is your cross-border business one compliance trigger away from losing its financial access? The insights from this analytical report make one thing abundantly clear. International entrepreneurs must proactively establish robust, advanced financial infrastructures long before a crisis forces them to. Embrace the friction, master the compliance mechanisms, and secure your business's lifeline. Thank you so much for joining me for this explainer, and I highly encourage you to review your current financial stack with these core insights in mind.